What's going on, guys? TWJ back with another video, and in today's video we're going to be going over my trading framework that's made me over $32,000 this month alone, and why most traders fail trading futures, right? So let's deep dive into this. I've made this really neat presentation that I want you guys to go through, and then we're going to go through onto the charts. It's going to be a pretty long, detailed video. However, I think you guys are going to get a lot out of this video. So most traders, why do they fail? All right. So they basically all have the same common trait of revenge trading. They don't have a trading plan. They've got no risk management plan. And in form, what happens? The trader quits, right? This is the most common thing, right? They have at least two of these things and they basically, in turn, they quit, right? So what is the real solution to this is a simple, repeatable strategy, right? So a simple, repeatable strategy that plays out nearly every single day. My R8 model plays out every single day. And some days are better than others. Some days are, some days you don't take a trade, Strong risk management, right? Consistency and discipline. These are basically the three things I would say is the fundamentals in your trading that you have to have right. So you obviously have to have a strategy to make money. You have to have risk management so you can take those, bad days that don't go to plan. And, the actual probabilities of a setup, let's say your win rate is 75%, that means 25% of the time you are going to lose, right? So if you have good risk management, that means you're going to stay inside the game, right? Consistency and discipline, right? Not just, I have so many people come to me and, one week they're taking A+ setups, and then the next week they're taking Z setups. Like they're taking setups that don't even make sense. And they're like, I don't know why I'm not profitable. I'm like, that's your reason. So let's get into how the market actually moves, right? How does it actually move? So the first stage is the accumulation phase. So this is where the market is just consolidating. We're not really going anywhere. Buyers and sellers are getting trapped in this market, and you do not want to be involved in this market, right? So we all know power of three, and if you don't know power of three, it's accumulation, manipulation, and distribution, right? Which is basically what we're talking about here, right? So going into the manipulation phase, I have a little money bag here because this is where most people get caught up and lose most of their money because they think this is the distribution move, and it's not. So most traders get caught up in this manipulation phase because they think, okay, yep, we've broken out and we're heading to the downside, but no, we're not. We're actually heading to the upside, and that's where we get into the distribution phase. So this is what you actually want to catch and use continuations to catch this move, right? So as we know, this is accumulation, and then we got a manipulation, and then we catch the continuation. This is our move that we catch to the upside, right? So that's basically what we want to be trading, all right? So what is continuation trading and how do we trade it, right? So basically continuation trading aligns with existing momentum. You avoid fighting the strong moves because you are with the strong moves, right? You ride the wave instead of standing in front of it, right? So have you ever been to the beach and there's a massive wave, right? You may as well turn around and swim with the wave instead of just standing there and absolutely getting plummeted, right? So same thing. What you want to be doing is trading with the trend, right? Also, another great one to say is the trend is your friend, right? Good coffee. All right. So this is a little diagram just to show you before we get into the real life chart example, right? So we have a bullish trend. As you can see, we're making higher highs. So higher high, higher low, higher high, right? So this is a bullish trend. And we are coming back into this FVG that we have here. So you can see how price taps in. So price taps into this FVG just here, and then we get a bullish move out and we close above here. This is a displacement candle, and you can see how price is just respecting bullish behavior to go to the upside. Same here. This is basically just saying this is a rejection from the midpoint, which is OCE of this, which is equilibrium, the 50% discount and premium. So this here is the discount of the range, and this is the premium. So you want to be buying inside the discount. All right. So going over here, I've just drawn this up. This is from one of my charts, and this is a really good example. So you can see how we have, this is the line chart, and this is exactly this move here, but on a line chart, right? And what you can see here is that the price is coming up, right? We reject from this FVG. This is an FVG right here, and price. So all this is, right, is internal, external, internal, external, internal, right? So it's basically just going from, so it's smashing this higher, then we go back to the internal range as I'm circled right here. And then we once we rebalance price, we come all the way back up, take external highs, and then we come all the way back up, back into 1 hour FEGs. So this is the internal of this range. And then what does price do? We seek the external range, which is eventually this overall target, which is this high over here, right? So this is just showing how price goes external, internal, external, internal, external, right? So this is how trends work, and this is how continuation works, and this is why it works so well. Even over here, you can see price comes back to the 50% mark of this range right here, this leg, right? Because there's no FEG, so we come back to the 50% mark, we displace, we take out these lows here, and then the market comes back up into this FEG, rebalances price range, and then it dumps, takes out this external range, and then we eventually, so this is where we stop, and we come back up, come back into this gap, and then we keep going. This is how price moves, people, right? So I think that makes a lot of sense. We'll move on to the next part, right? So, and we'll deep dive into that, into the charts a little bit more, right? So use liquidity to determine the move, right? So liquidity is basically price moves. So price moves towards stop losses in the market. All right. So let's go back up to here real quick. So at this point in price, when price was up here, it just took about a lot of stops out of the market. And now, instead of just keep going higher, there's stop losses down here. So price comes down, sweeps out all these people in the market down here, fills their orders, goes up here, takes out these stop losses, takes out these stop losses, takes out these stop losses, takes all this. So all up here, people have their stops above this high, above this high, above this high, above this high. So when the market runs straight through it all these people in the market get taken out, right? So that's liquidity. Liquidity is at resting highs and lows, and then session liquidity is just the same thing, basically just with using sessions. So Asia high, Asia low, London high, London low, AM high, AM low, PM low, PM high, same thing. And I just have on here, which is the same thing again, unfilled high time frame gaps. This is my best one. So if we go back here, at this point in price, right? So when we were here, we had an unfilled 1 hour, right? We come down and we smash this 1 hour unfilled, right? So this is a really good draw on liquidity. Same with this gap here. Same with this gap here, right? And then at this point in price, right here, we had this unfilled 1 hour right here. So this is a really good draw on liquidity. Probably my favorite is unfilled gaps, right, on the hourly time frame. So to use this, use the 1 hour time frame. So use the 1 hour, use the 4 hour, and use the daily, right? Use the daily. Write that down. They're my best ones to use in high time frames, all right? And if you need to get session liquidity, just use ICT, kill zones, and pivots indicator. I talk about this a lot. All right, so these are our targets in price. This is where we want price to be targeting. So you just find a continuation set up towards these areas in price. It's as easy as that. Stop overcomplicating your trading. It does not need to be any harder than this, right? It's very, very simple. All right, so let's get into the juicy stuff. The R8 model framework and how I trade it. This is the easy framework that follows 4 steps. 4 steps. You don't need to look for this, that, all to align. I know some models that have like 8 steps, and if you don't get all 8, you can't take a trade. It's ridiculous. So we want to make sure the market is valid for trading. right? So if we go back all the way up to here, in here, you want to make sure that we're not accumulating. You know, the market is actually trending towards something. So inside the manipulation phase or the distribution phase, the market is actually moving, right? So you want to make sure the market is looking like it's actually wanting to go to draws, right? And that gets into the next part, valid structure and strong draws on liquidity. So draws on liquidity are exactly what we talked about these here. So if you do not have any of these in the market, you don't trade. If there's nothing that stands out to you, you don't trade. It's as simple as that. And most people go, oh, it's not obvious today. What do we do? You just don't trade. And what do they do because they're unprofitable? They trade. All right. So now we'll go to our next one. Find a draw on liquidity. So first step, find your draw on liquidity. So let's say we're in the market here. We'll use this, for example, over here, we have a session high. This is our draw on liquidity. So this is our DOL. This is just a session high. So let's say this is our market. That's our session high. This is what we want price to be targeting, right? We want price to be going up to this draw on liquidity. Now, wait for displacement. So we've got displacement right here. And then, so find your draw, wait for displacement, wait for price to confirm the move towards the draw on liquidity. This is identified with displacement. So just make sure the price is displacing towards the high, right? If your draw and liquidity is up here and the price is dumping, you're probably wrong on where you want price to go. And then number 3, wait for retracement. So you're not the retracement, right? So wait for the price to retrace an FEG of choice. We use normally the 30-second and the 1 minute usually. We can use a 5 minute sometimes as well. This ensures your position isn't at risk of being the retrace. So how many times have you entered the market up here and then the market comes down, retraces and then goes, right? So simply you should have waited for this move here and then caught this move right here. Not rocket science. Now number 4. Enter on displacement or IFEG towards a draw. And now I've got some really good examples to go over. So this right here, we've got a bullish move. This is our displacement. Let's say draw liquidity is up here and price. So at this point in price, you don't enter just because you're so close. It doesn't mean anything. You go on the 30-second, 1 minute, you find FEG of your choice. Right here, we have an FEG. Price will come back up into this gap, right? If we disrespect this gap, so we keep trading lower, obviously we're wrong about the draw and we should redetermine what we want price to do. However, in this instance, price respects this gap to the upside. So we are respecting bullish order flow and you'd simply enter off the displacement candle that comes out of this range and you'd catch this move right here. So your entry would be here. Your stop loss could either be at the body low or the swing low and target right here. These often end up being a 1-to-1 or 1-to-2. So right here is the IFEG example. So obviously price is coming back down into this gap right here. And as you can see, we left behind this little 30-second or 1 minute gap. And you can see how price comes out of this gap and we inverse this. So we get the body closure through this gap. This is an IFEG and you can take your entry right here, stops here, and target a 1-to-1 or whatever you want to do. Right? There's obviously more things that go into the R8 model than just this, but this is just an example of an IFEG. All right? So now you know the entry framework. Let's get into some other stuff. So you want to understand the higher time frame, right? Always check the higher time frame to catch the distribution phase. There's no point trading the lower time frame and not knowing what the higher time frame is doing, because as we know, the higher time frame holds more power. And don't get caught up in the lower time frame because you'll get cooked. All right. So this one's a big one here, right? Always check down. Always understand what's going on in the higher time frame. Risk management, right? So I personally risk $500 per trade on 50K accounts when I'm copy trading. I do have some accounts that I do risk way more. However, they are more risk on accounts. However, for my steady goers, I just trade with $500 per trade. All right. So I can take 1 to 2 trades. in that day if they're A+ setups. All right, so risk keeps you in the game for longer. You can't score from the sidelines, right? So Stephen Curry can't play from the sidelines. He has to be involved in the game to shoot his threes, yeah? So same thing. There's no point, over risking, and there's no point Stephen Curry fouling 6 times, getting sent off, and he can't score anymore. He's done for the game, right? Same thing with you guys. You guys over risk on shitty trades, right? And then you can't play. You can't trade. Same thing. So have risk in play, your risk management in place so you can actually play the game for longer, right? Discretion in your trading matters. This is probably one of the biggest ones here. So you can't just pattern trade in trading. You can't, right? Because if everyone pattern trade, you lose all the time because you wouldn't have any bias in the market, none of that, right? So how do you get discretion in the market, right? So obviously, time in the market, you develop discretion with time. You can't buy time. It just happens over time, right? Taking the same losing trades. So if you keep taking this same losing trade and you keep getting stopped out, you're going to learn over time, like, oh, I took that setup last time and this failed. So maybe it's not a good idea, right? And data collection over time. So stacking your journal with losing and winning trades. Over time, you're going to have, let's say, 430 trades in there with a win rate, with your losers, the time in the market that you lose. So let's say at 9:37, right? Your win rate is 92%. But then I know this because this is personally for me. Anything over 10 o'clock, right? My win rate is like 60%. So if I'm trading over 10 o'clock, I have a way less of a chance to be taking a winning setup. So I know that because I'm collecting data, right? So I know if I trade before 10 o'clock, I have a better chance of catching a winning trade. So that's why I trade with strict times, right? So the biggest mistake unprofitable traders make: always check the higher time frame to catch a distribution phase, as we know. But actually, this was not meant to be in here. Right? Just ignore this. All right. So the biggest mistake unprofitable traders make: copying trades, signals, strategy hopping, these things, right? So why are these things so silly? Because taking signals is the worst thing you can possibly do, right? So do not take signals because most signal groups are scams anyway. But even if you've got a legit signal group, you don't even know what you're doing. You're just taking random trades, hoping that it wins. This is not trading. This is simply the stupidest thing you could ever do. Now, the second thing is copying trades. I know a lot of people, and I do have a live trading premium Discord, so people will copy my trades. But this here is nearly the same as signals because you're not actually learning how to trade. You're just copying someone else's trade. So what happens if I stop live trading? You're not going to be able to know how to trade. So you use the live trading Discords to see how the trader that you're watching understands and learns the market, right? So do not copy trades. Strategy hopping is the number one thing. So people, go, okay, I'm going to learn the R8 model. They backtest it for one day and they go, oh, I only have a 50% win rate. What the hell? Like James is 90% win rate. How? Like, I don't get it. And then they go, okay, I'm going to go learn Power 3. And then they go learn that for a week and then they come back to the R8 model and they're just all over the shop. So you have to just pick one strategy and continuations is the go. I'm telling you now, it's the easiest way to get payouts 100%. So just deep dive into it and commit, right? So this is the kind of the endless loop. So you've got no trading plan and then you go into unprofitable habits like that I was talking about, all these, strategy hopping, signals, copying trades, and then you strategy hop because none of this works and then you get no results. You either quit or you go back and you just do this endless loop where you never actually get anywhere in trading, right? So we know all of these things are absolutely true, but what is the overall goal of trading? What is the goal of trading, right? Goal of trading. So the goal, in my opinion, is executing high quality trades consistently. There's no point executing high quality trades for 1 week and then going back to your shitty habits. Just keep executing high quality trades and you will be surprised how well you actually go, right? And obviously when done properly, your results are going to skyrocket, right? And over time with collecting data, journaling, and following your rules, you'll actually be surprised how far you actually get, right? So there's more, obviously, the overall goal, in my opinion, is this, right? But there's obviously other goals, like you can get your risk in play. Like your goal could be, okay, I want to have a good risk management this week. So what I do is I open up my journal, and let's say for the first week of a month, my first goal could be this: high quality trades. I tick that off. The second week, I go, right, I want to get better at risk, right? So I write down what I want to do for risk. I work on that for that week, and I can just slowly pick away at goals week by week. I can't just go straight into the month and go, I want to do this, because you get lost. So just pick away one thing at a time, and over time, you're going to get good at those things, right? Cool. So, that's it for the presentation, but if you guys want to, I have a free Discord that you guys can go check out. I'll drop the link in the description. It also has my live trading in there as well, so you can watch me live trade London session and New York session. You can also just be involved in the free Australian community. This is honestly like a no-brainer for me, right? So I'm going to bring you guys back and we'll go onto the charts and have a look and deep dive into what I mean with high time frame narrative. And so I'll bring you guys back. Alrighty guys, let's deep dive into everything we just spoke about, but on the charts, right? So let's start with the first one being how to determine where the market is going to go, right? So there's number one, which is price swept a high/low and is looking to rebalance price. Or number two, price has rebalanced and is seeking high/lows, right? That's it. There's no other circumstance the market is going in, right? That is all the market does, and this is the only thing you need to look for. For when you come into a day, go, righto, has the price swept out high/low and is it looking to rebalance price into high time frame gaps, or has the price been rebalanced and is seeking high/lows? So let's open up another text. So what PD arrays do we look for? So I love to find daily, 4-hour, 1-hour FEGs. Right, so that's our high time frame draws, session high/lows, and let's say new day opening gap / new week opening gap, new day opening gap. So new week opening gap, new day opening gap, session high/lows, daily, 4-hour, 1-hour FEGs. You can even use that's just to look for this, and then we can also use high/lows. Cool. So that's mainly what we're looking for. That's probably not the best title. What draws and liquidity do we look for? Right. So that's what we mainly look for. Now, the times I like to trade. So let's go into that. So best macros / times to trade. So the best times to trade. So if you are working during the day and you can trade London session and trade New York, I'd be picking New York session. So New York AM. So the main macro time is going to be 9:45 to 10:15. So if I don't find a trade within that time, I don't take a trade. I normally get off the charts around 10:15. Now the other New York AM session one is 10:50 to 11:10. This is a good one, but you have to stay up a little bit longer to find this. This is normally the 10 a.m. candle reversal or continuation. Now, if you want to trade London, the best one would have to probably be the 250 to 310 macro. And you can also possibly trade the 2 a.m. open, right? So that's also a really good, this is the kill zone open. However, macros, this is probably the best one because you get the 3 a.m. actual open of London. Kill zone, this is meant to say kill zone here, right? So how do you find macros and times? Just go up into indicators, type in ICT kill zones, and you can turn this on and this will show, we'll go on the 15-minute chart and this will show all your session times, how they open up. And you'll find London opens up, targets lows, London opens up, targets highs. So it's really all the same stuff that we teach, right? Let's go back onto the high time frame and grab our text again. All right. So we know these are the best times to trade. We know what draws we're looking for, and we know this is basically the framework that I trade off, right? So going down into the lower time frames from this, the R8 model, right? We find our draw, find our DOL, we wait for displacement, we wait for a retrace, and then we enter off IFVG or displacement. That's it, right? So that's the framework. This is the framework behind it, and then this is the actual entry model, right? So this is important, but without all of this, you can't trade this model, right? So you got to put everything into play. So knowing all this, let's go into the charts and we can find out basically how this works, right? So let's go on the 1 hour time frame. I love the 1 hour time frame, and we can come back to this day here. This is a really good example of everything I just taught in this here. So let's start from the very top and work our way down, right? All right, so how to determine where the market is going on this day? Where's the market going, right? So I can already tell you price has swept out a high/low and is looking to rebalance price. Why? Because if you scroll out, right, always scroll out, you see this low over here. We have swept out this low completely. We've taken all the orders out here, and we have a spot where price needs to rebalance, right, which is this right here, which is a new week opening gap. So also we have a high time frame FVG and new week opening gap, and it's basically a high as well, right? Let's just call it a new week opening gap. So we know we are number one. We know we have a new week opening gap. So we have everything lining up. Now, do we have a time that we can trade? Yes, because this is London open, right? So we can trade the London open. So we know we're trading London. And now all we have to do is find these 4 entry models, right, to get inside this trade. So the number one is find DOL. We've found the DOL because we know we want to target this high in being the new week opening gap. Now we can mark this out. We'll just put the line there, and we'll put a line at the very top of it as well. So we know this is our new week opening gap. So we've found our DOL in being this, and now we wait for a displacement towards this high. So now we can drop onto the lower time frames. So let's go on to, we've got the 1 hour time frame here, and we know we have, in being the internal external draws on liquidity like we learned from before, we have this 1 hour gap, right? So we know price wants to come up here, right? But we know price needs to be rebalanced before going up to highs, right? So price is more likely going to come in and then expand out, right? It's not just going to go straight through. So we drop onto the lower time frames. We can go on the 5-minute time frame for this, and all we want to do is see price come into this area. So let's just skip. So price has come into this area. Now, the one thing would be that my condition for entry would be this 5-minute gap we have here. We've tapped into it 3 times and we are respecting it. So we simply want price to disrespect it like we have here. So price is disrespected. We're inside 3:20 a.m., which is London. We can put our entry here. We can put our stops below this swing low, and we can target the new week opening gap. So already inside this trade, we'll go back on the 1 hour so we can find our little list up here. So we've waited for displacement, right? Let's put that back there. So we've got all these things, right? So we found our DOL, which is our new week opening gap. We've waited for displacement, we've waited for the retracement, and now we've entered off an IFEG, right? So this is our model. So we come down back to the 5 minute right here. So we know we're going to this high because we've got displacement towards this high. We've waited for the retracement, and now we've entered off an IFEG, which we have right here. So let's get rid of this. We've got the IFEG right here. This is our IFEG. If there's no gap here, we could still enter on this because this is simply displacement of this candle. And then we ride this trade out. So let's actually put a trade on in demo. So we can put this, we can just put 3 minis on this, and we can put our buy, and we can put our stop loss down here, and we can put our TP all the way up here. And you can confirm this, and we can hold this trade, and we can see how it plays out, right? So we chop around a little bit. Once we get this solid displacement above this high, you can go break even. If you don't want to go break even, you can just hold your trade, knowing damn well after this displacement, we should be able to go break even on our stops. So we'll go break even on this trade. We'll just trail. So from here, so we'll learn how to manage this trade as well. So we know price is going to go to this high. This is damn well confirmed. However, we've got these imbalances to be filled, right? So what you can simply do is you can trail your stop. So wait for price to come back into this gap here, which we do, and we display straight through, take full profit, but you could trail your stop below this. Once we're displacing higher, you can trail your stop to here. So if price wants to come back down and come all the way back down to break even, at least you would carry through nearly a 1R, right? So at least you take some profits out of the market, right? So that's basically, I cleared all our drawings. No, I cleared the drawings. Can we undo? Can we undo our drawings? No, we can't. Okay, that's fine. So basically that's just explaining the whole framework from step 1 to step 2 to step 3 to step 4 on how to find a trade going down from the very top of the list to the very bottom of the list, right? And it's very, very simple. So understanding like that simple framework of, okay, we've just taken out a high, we need a rebalance price, or we've just rebalanced price, now we want to take out a low, is simply how the market works, guys. It is simply how the market works, right? So let's just go into this time right here. I'll put this actually inside actually, no, this wasn't inside it. So inside this leg, right, let's just play this leg out here from here, right? So sadly for this example, we didn't tap into this gap here. However, let's keep playing this out. So in this leg right here, this would be our target. So we want price to target this leg right here, right? So price takes this, we leave this gap here. So what I'm assuming is price wants to come back into this gap to rebalance, because this is taking out a high. Now we need a rebalance, right? So we've taken out the high. As you can see on that candle here, we've taken out this 1 hour gap, which is the internal. Now we're going to seek external. So we're going to take out this high now and possibly search for this high up here, possibly even search for this high. I mean, really our overall target is these external draws on liquidity up here. So let's just see how far price can go, right? So we've taken out this external range. So now we've taken out the external range. It is possible that price is held up with this gap and we might come down. So we want to see displacement through this gap. We take out this gap as well, right? So we can just continue to play price out here and we take out the final draw. Now, once we get this full sweep of these 3 highs up here, we want to really be seeking for internal range, right? So I was going to say we should have a 15-minute gap. We have these 2 15-minute gaps. We'll draw them together, see if price wants to come back and balance the range a little bit more. We just kind of chop around, and we eventually probably come down to these draws here, right? So you can see how price struggles to keep moving forward. We've taken out this high and then bang, we come down back into the range because we need a rebalance. So from here, it is possible that price just wants to keep going higher because on the higher time frame, we are bullish. We are holding this 1 hour gap and we want to go higher, right? But as you can see, it's the same thing. Let's draw this here. We have this 1 hour gap. I would say price will come up into this 1 hour gap. So let's just keep playing the 1 hour out. Bang. So price takes out the low. This is actually so clear, right? So price comes down, right? Well, this is London session. We take out this low right here. So we take out a low, and what has to happen after taking out a low, guys? Taking out imbalances in the range. What do we have? We go on the 1 hour time frame. We have an imbalance in price. Bang. Takes out a low, looks for imbalances. Takes out an imbalance, looks for a high / low. So from this, price looks for coming out. So coming out of this gap right here, bang. Come over here. You see how the price takes out an imbalance and seeks out a low. So it seeks out this low, bang, right here on this candle. So we take out a low, and then we go to find imbalances in price. I don't need to keep going over it, but that's a really good example of how this just plays out in the market every single day. So I want you guys to write that down and go find examples on your chart, but this is how the market moves, right? So if you guys want to as well, I'm going to plug it again. I do have a free Discord in the link in the description. So go click that, join the free Discord. And if you want to watch me live trade as well, I have a live trade London session and New York session as well. So you can join the premium if you would like. We have a 7-day free trial, which you guys activate in there as well. Yeah, other than that, I hope you guys have a good rest of your day, and I'll see you guys in the next video. Cheers.